Welcome to the latest episode of the Monetary Club. My name's John Petley. I am the Senior Researcher of the Institute of International Monetary Research. And my guest today is Dr. Gabriel Stein. He has been a long-term friend of the Institute. He has lectured for us in some of our courses. For 30 years, he was an economic forecaster. He's lectured also at a number of universities, both in the UK and in Vietnam. And our subject this afternoon is central bank digital currencies, or CBDCs for short. Welcome, Gabriel. It's good to have you with us.
Thank you very much. It's a pleasure to be on the podcast.
Well, my first question for you, and it's a pretty fundamental one. Where's the market for central bank digital currencies? I believe apart from in the United States, in most advanced economies, 99% of all people, if not more, at least of adults, already have a bank account.
Yeah, the arguments for introducing CBDCs vary a little bit. In some countries, Sweden is a prime example, but it's not the only one. The concern is that cash is disappearing. One of the then deputy governors of the Riksbank, the Bank of Sweden, said to me in the mid-2010s that their forecasts were that the last banknote will be used in 2028. Now, obviously, that's not going to happen. Cash will remain to some extent, but there is a feeling that as cash is used less and less, the general public will no longer have access to central bank money, to legal tender. And so CBDCs is a way of providing digital forms of central bank money. Another argument is that many central banks, particularly in Western countries, worry that someone else, and for someone else, read the People's Bank of China and the People's Republic of China, will be the first to introduce CBDCs and will set the ground rules and will dominate the system. I'm not sure how relevant that actually is, because there's nothing that says that we have to use a Chinese system, even if they are first. And I think the third argument was, I don't know if you recall, but quite a few years ago, there was talk that Meta, the owner of Facebook and WhatsApp and so on, would introduce their own digital currency. And there were fears among central banks that this could take over from national currencies. Again, I'm not 100% convinced by that argument for perhaps two reasons. The first is that Meta has long since abandoned their plans. That doesn't mean someone else can't do it. But also, at the end of the day, the control over money is about power. And it's very powerful. And governments are not in the habit of giving up power. Governments are in the habit of amassing power. And a government can always control what money circulates in its economy under, I should stress, normal circumstances by simply saying, this is the money with which you have to pay your taxes. And if a government decrees you have to pay your taxes in pounds sterling or in euros or in Icelandic krona or whatever it is, then people will want to use that money. So even if Facebook or any other company had a private digital currency that was useful, at the end of the day, it would not be as useful as a national currency unless your economy completely tanks and your currency is useless, like, say, Zimbabwe or Venezuela, but we're not there. So I'm not really convinced by any of these arguments. And your point also that most people in any advanced economy are already banked. Perfectly true. And in fact, I think you will find that in many developing countries, people are more and more banked anyway, usually through their mobile phones. I actually think the mobile phone is potentially one of the two or three most important developments of the 20th century, because today you have to travel very far into remote areas of the world to find someone who has never seen or used a mobile phone. And as we have seen, notably in some African countries, that is where banking is going. So I more and more get the impression that CBDCs are an answer looking for a question. If you want, we want to do this, therefore we will come up with arguments. But is the actual need there? Very debatable at best.
You mentioned China. Now, one of the things that people concerned about CBDCs have raised is that they could be used as part of a Chinese-style social credit system, even though I know that in China, the CBDC transactions are still a remarkably small part of their economy. But this hasn't stopped people worrying that somehow the governments will want to push CBDCs as a way of just monitoring how you and I, how ordinary people spend their money, and in fact could go further and prevent us from buying things that they don't want us to get.
So that definitely is a possibility. And in my PhD thesis, I actually quote two publications which both talk about doing away with cash and touch upon this. One is Ken Rogoff. His book is called The Curse of Cash. He wants to do away with cash because cash is mainly used in the underground, in the illegal economy. So he's in favor of it. The other is by the late Swedish economist Ingmar Ståhl, who long ago wrote a short paper called Now It's 1984. I don't think he wrote it in 1984. But this is a dystopic satire where he goes into exactly this. He says, look, if we all shift to digital money, then it's much easier to control what we spend money on. It is possible, certainly with all electronic money, transactions can be traced. That's one thing. That's very simple. They can be traced. We were told that cryptocurrency are anonymous. Then we found out after the Russian invasion of Ukraine that it was perfectly possible to trace transactions by Russians in Bitcoin or other currencies and to block them or freeze them. So what you do can be traced and combined, obviously, with who you are. You completely get away from the anonymity of cash. And I think, though, that a control system, and by the way, there are a lot of misunderstandings about this Chinese social credit system. It isn't as threatening or as well developed as it often is painted to be. But nevertheless, the potential is there. The potential is there to trace what you spend money on, and the potential is there to say you're not allowed to spend your money on this. And certainly, if we shift to cash completely disappearing, and then this is a risk, and it's not necessarily it doesn't have to do anything with CBDCs. I mean, let's face it. If China did not go down the CBDC route, but let us say used Alipay and WeChat Pay, do we think those companies would resist an instruction from the central government to provide access to data of what people are spending on? Of course they wouldn't. So you can do it, but it would only work, I think, if we all only use digital money. There would be an enormous amount of data to analyze. And of course, the first thing that would happen would be that sellers of drugs or providers of sex services would figure out ways to disguise what you're paying for. No, Dr. Stein, of course, you're not paying for 2 hours with this beautiful young lady. You're paying for a pedicure or whatever, a very expensive pedicure.
Yes, this argument about a cashless society being a good thing because only criminals use cash these days, it just doesn't stack up if you look a bit sort of further below the surface. I mean, just take a very trivial example, you think of something like a village jumble sale. We had one a few weeks ago in the next door village to where I live. I mean, you're going to tell me that everybody who's just turned up with a few items to sell has got all the necessary gadgetry to take card payments and all this stuff? No, I think there's always going to be a need for some cash payments.
I agree, and there are some shops, small corner shops that will say we have a minimum limit for how much you need to spend if you want to pay electronically, and so I dare say if all you want is a bag of crisps or whatever, they're going to say, well, you can't pay electronically for that. So there are things like that. I mean, I should say again, so this is your example, though. It's interesting because this is in Britain, where there is no system for instantaneous phone transfers. Now, if it was Sweden, there wouldn't be any cash used in the village jumble sale because everyone would just say, well, this is my phone number, just swish me the money.
Right.
But I do take your point. And also, we think, so Sweden, Denmark, Norway, China nowadays, very much cashless societies. On the other hand, there are countries where cash is still used to a substantial extent, even advanced economies. Germany and Switzerland are very cash-heavy economies in relative terms. As, by the way, is the United States, but then their financial system, I mean, they still use checks, for God's sake, so it's pretty primitive.
The other thing about cash is somehow it hurts more. It seems like it seems like a bigger hit to your own bank accounts if you actually hand over a load of banknotes rather than if you just put a card into a machine.
That's very true as well. You think about it in a different way.
Anyway, to go back to the CBDCs, I mean,
Yeah.
suppose they came in, would they actually take away custom from the commercial banking sector?
Uh, well, it depends how it's done. Um, Certainly, one possibility where they definitely would do that is if they were run so that households and companies would open accounts directly with the central bank. Okay, then very definitely that would be in competition with the commercial banking system, and I think that's also why I don't think any central bank is prepared to let that happen. So they will issue the CBDC, but they will be distributed through the banking system or through tokens or wallets or something. You will not have accounts directly with the central bank, apart from the fact that the last thing central banks want is to have to deal with masses of clients who suddenly are unhappy about their service or whatever. Um, It then depends a bit how it's done. For instance, if we take the euro area, so in the euro area, they are saying that, um, first of all, there will be a limit on who can hold CBDCs, only individuals, not commercial companies. Second, there is a limit on how much you can hold. 3,000 euros is the current discussion. Now, that's a lot of money, but not really in the great scheme of things. I mean, I was going to say if you sell a car, but ignore a car. Say that you sell a relatively fancy bicycle, 3,000 euros, you very easily bust that. So there has to be apparently, there must be some it's sort of like a waterfall principle. You are a shopkeeper, I come and pay you, and I decide that I'm paying with the card that's linked to my CBDC wallet. But the moment the money appears in your bank account, the moment I've paid you, it's not a CBDC anymore. So it simply becomes yet another account, as I said, perhaps not linked to a bank, perhaps linked to a wallet. So it needn't be, and certainly if the central bank is not in the business of lending to households and companies, which again, there's no way they would want to do, I doubt that CBDCs would take business from the banking system. But once again, you ask yourself, again, if we stick to the euro area, what is the point? I mean, essentially, if we make a thought experiment and say this is equivalent to saying 10 euro notes can only be held by individuals, and individuals are only allowed to hold, well, let's say 300 10 euro notes, so 3,000 euros. So the moment you pay with a 10 euro note in a shop, the shopkeeper has to cut it in two to make two 5 euro notes or whatever. It's no longer the same. I mean, it sounds very and unnecessarily complicated. I would say actually that that system is probably set up specifically to not compete with commercial banks. But then again, you ask yourself, what is the point? And I should say, by the way, the Bank of England, and I know you want to talk about the Bank of England further on, John, but they are also, insofar as they're talking about CBDCs, they're also talking about a limit. There, the limit is supposed to be higher. I've seen figures of £20,000. Still quite a substantial difference from today's world, because today, if for whatever reason you distrust, you believe all financial markets are going to crash, you believe that the housing market is going to crash, there is nothing to stop you from selling absolutely all of your assets, your shares, your bonds, your jewelry, whatever, and your house, and to hold cash. Now, there are practical reasons why you wouldn't want to do that, but you can do it. But obviously, even £20,000 doesn't go very far if you wanted to do that digitally, or at least you couldn't hold CBDCs. Now, and here, of course, if CBDCs are supposed to be a complement to banknotes, the other form of central bank currency, then there is indeed a very significant difference between them. Two kinds of central bank currency, notes and coins on the one hand, and CBDC on the other. No limit to how much you can have in notes and coins, but a very, very low limit, at least in the two economies we talked about, UK and Euro area, of how much you can hold in the CBDC. And of course, that brings us to another point, which is, if there is such a significant difference between two types of money, why would they be worth the same?
Yes, that was a question I was going to ask you about. I mean, suppose the Bank of England or any other central bank decided, as one or two of them did in 2020, to impose negative interest rates. You've now got a problem where your central bank pound, euro, digital euro, whatever, is actually worth less than the pound in your pocket.
Yeah, well, that's actually really interesting. So let's first look at the other way. What were to happen if, for some reason, the CBDC is worth more than the pound in your pocket? Well, that's very simple. The central bank can simply say, well, we exchange at par all the time. Unlimited amounts exchange at par. So that deals with that. But the other way around, yeah, well, if there is still notes and coins around, then at one stage, negative interest rates will be so low that people will start using notes and coins. Now, where is that? We don't know. We know that negative interest rates of minus 0.75% did not get us to that point, possibly because they were actually not transmitted to the non-bank private sector by the banking system. It was, as it were, a penalty rate that the central bank imposed on the banking system, but they didn't pass on the negative interest rate. But But it could happen. Let's say that we are in deflation. Government central bank is desperate to make people spend more money, and they say, well, 10% negative interest rate every month unless you spend the money. So people start spending money. If there are notes and coins, people can move into notes and coins. If there are not, you can, of course, you can hold, you can say, well, I'm not using CBDCs. I will have none of them in my wallet, my token, whatever, however it works. I will simply hold normal bank account. What happens if the government then forces banks to follow suit? Not sure. But if they don't follow suit, as you say, it would then become more valuable to hold money in a normal bank account because there's no negative interest rate, as opposed to your CBDC, which is hit with a negative interest rate. Differential would develop. And that, of course, makes conducting monetary policy much, much more difficult. There are lots of questions. What is the numeraire? What is the legal definition of a pound? Is it a pound issued by the central bank and subject to a depreciation, as I said in this far-fetched example of 10% per month? Or is it the pound in your account with Barclays, which is not subject to the same erosion? That would have to be legislated. And the mere fact that such legislation takes place implies that the government or the monetary authorities are indeed planning for a situation where there will be a differential. It also makes it more complicated to function in such an economy. In 1981, I spent a year in Israel studying Hebrew and then working at the Israeli Ministry of Finance. This was a period of what the then Minister of Finance referred to as proper economics, but which you and I would have called 400% inflation. What happened? Anyone who had access to any foreign currency would use that. And if you went to any shop, and that included supermarkets, to go buy some milk or whatever, there would be a list at the entrance saying, today's exchange rate is US dollar, pound sterling, Swiss franc, French franc, Deutsche Mark, Canadian dollar, Aussie dollar, all the major currencies, such and such an amount of shekels. It worked, but it does take time and resources away from more productive use. And of course, it hits worst the people who find it difficult to constantly try to arbitrate between currencies. As I said, it makes monetary policy much, much more difficult. So there is a possibility there. There are, in fact, some academics who have suggested that central banks should intentionally use different values between CBDCs, and I tend to call it legacy currency, so bank accounts and notes and coins, as a monetary policy tool. But I don't think central banks have considered this very much.
It seems as though there's an awful lot of questions that are being raised that the central banks don't seem to be very prepared to have come up with an answer to. I mean, another point that we could touch on briefly is if people had an account with the central bank, okay, €3,000 into lot, £20,000, a bit more, but still not a huge amount. But all the same, there'd be the fact that compared with a commercial bank, one can't imagine the central bank having the resources to conduct due diligence and look at whether someone is, what their creditworthiness is like.
Absolutely not. And I think it's pretty safe to say the last thing central banks want is for non-banks to be able to have accounts directly with the central banks. They do not want to spend time and resources on managing the accounts of potentially millions of people. I mean, as they would have to expand massively their presence. It's not going to happen. Central banks are absolutely terrified of the idea of households and companies, of the non-bank sector having accounts with them, and they will fight it tooth and nail. And it's for cost reasons, and because they simply don't want the hassle, they don't want all the complications with that, I just can't see how they would be prepared to do this.
Well, as you know, I fully share your reservations about CBDCs, and I can't imagine anybody who listens to this podcast who just doesn't know much about them or didn't know much about them will be particularly convinced that they're a good thing. But
can I make just one more point? Because I did allude to this in the beginning. I said, if you assume that legal tender is necessary. Now, legal tender, just very quickly, it's one of the most misunderstood concepts when it comes to money. People frequently think that legal tender is what you have to accept as a means of payment. It is not. Legal tender, as I know you know very well, is what you have to accept as payment for a debt, provided that debt is expressed in the legal tender and you are in that jurisdiction. In other words, if we live in England and I owe you a sum of money expressed in pounds sterling and I give you cash, you have to accept it. Okay? That's the only thing legal tender does. It's perfectly possible for a shop or let's say a taxi driver to refuse to accept legal tender, as in fact we know in England, because there are shops and taxi drivers that will refuse to accept a £50 note because it's too complicated for them, and because they'll have to take it to the bank. They can never pass it back again. Scotland doesn't even have any legal tender apart from coins to the value of £2, and the economy is functioning anyway. So legal tender is, strictly speaking, not necessary, and that being the case, and that's also the conclusion of a report from the Bank of Canada, by the way, that being the case, one of the key arguments for introducing CBDC is providing access to legal tender falls.
So there we are. We wait and see what happens, but I don't think the worst fears that people have had, if it's going to be imposed on us and the government's going to be spying on us, etc., that seems very, very far-fetched. I think that's not going to happen.
No, I think you're absolutely right.
Well, thank you very much, Gabriel. It's been a most interesting discussion, and I hope that those who listen to it afterwards, who perhaps weren't aware of all the ramifications and indeed the very serious question marks about CBDCs, will be much better informed. So thank you once again, and I'll say goodbye.
Thank you very much, and goodbye.